take a fresh look at oil, gold, and currencies this morning. Stephen Shork on oil, Michael Wolfhook on the dollar. Guys, good morning. Dressed almost exactly alike. You can't see it because of the sponsor. Stephen, let's start on crude. We had Greenspan on the show Friday, and he argued that you got to watch Brent and not so much WTI for various reasons. Is U.S. crude undervalued at this level?
Well, the U.S. crude marker is on the NYMEX futures contract, Carl. It's a corrupted market. There's not enough storage capacity where you make and take delivery out in Cushing, Oklahoma. We have a glut of Canadian oil feeding down into the West Texas area, the Cushing area, and that's keeping the glut in place. And you have a structure in the futures market that's going to continue to give you an economic incentive to keep that storage into place. So it is absolutely market and, again, corrupted. And if we look at just Friday's CFTC report, speculators, managed money accounts were long 268,000 contracts. That is nearly 6 times the storage capacity out in Oklahoma. So even if these speculators wanted to take delivery of all this oil, they can't because they have to go find space for 6 barrels for every one that's available, and that space is already taken up. So yes, Brent is the marker. Louisiana Light Sweet is the marker. All similar crudes, Bonnie Light in West Africa. All these crudes, Carl, are trading well over $115 a barrel. So with the NYMEX contract at only $107 a barrel, yes, the true value of oil right now is close to $120 rather than $100, right. And that's certainly a problem because now we're talking $3.70 this summer at the pump at a minimum.
Yeah. Do you think we can get any relief on crude if we sort of just chug along with turmoil in Libya? Is it contagion that's the game changer or not?
Right now, as we all know, markets hate uncertainty, and you've got duration and contagion. Duration, we have no idea how long this is going to last in Egypt or in Libya. And certainly we have contagion with the ongoing conflict between Shia and Sunni Muslims, and that can certainly spread into, God forbid, Saudi Arabia, Kuwait, the UAE, and then we'd really have problems. But I also want to point out, over the past week, we've seen a 30% conversion in the price of Brent oil and the price of New York oil. So again, oil upwards of $115, $120. This conversion between New York and London prices is a sign that oil is nearing a top at this point, assuming another domino in the Middle East does not fall.
So you think, what would be, where do you think the high is for crude then in the near term? Barring any major changes overseas.
But barring any major changes overseas, we're there already, Carl. You're looking at a market over the past 2 weeks that has jumped 25% above its 200-day average. It's a market that's gone absolutely parabolic. If we don't see another headline, yeah, I am comfortable in saying we are at near the top right now.
So I should cover my bet with Joe, where he went short at 75.
No, it's 92.
92.
92.
I would cash in those chips.
No, here's the deal, though. See, I was going to cut you some slack, Shork, because, you know, that was your famous quote or your famous call at 80. That it could be 90, it could be 70. I expect it to be somewhere between 70 and 90. When we're at 80, you didn't say we were going to 115 or 108. But but in my defense, I didn't know Libya was going to implode either. So that's why, you know, exactly. Carl. He's taking credit for.
I'd rather be lucky than smart.
He's taking credit for analyzing the supply-demand
and the geopolitics.
And the geopolitics. So I'm cutting you some slack because I'm also losing my rear.
Unfortunately, I said I'd sell oil in the low mid-90s, and I did.
It's at 80. You say I could see 90 or 70. I could see. If it's 70, I could see 80 or 60.
Nimble. He's very nimble.
He gets 10. You know, he goes 10 points on either side of where it is on the day he's on. And
I'll make you a market. I'll make you a market. I'm 70 bid at 90.
Yeah, I know how you operate. Wolfhook's going to do the same thing in currency.
Well, I was going to say we got an interesting round number at $100 a barrel, Michael, but also at $1.40. Is this also a high for the euro?
No, I think that certainly these markets are correlated. Go back to 2007, 2008. You saw a correlation between record highs in crude oil. It rallied to 146 a barrel in the NYMEX, as well as it certainly did not get in the way of the stock market rallying, the Dow rallying, and we reached a record low in the U.S. dollar against the euro. I think you see the same correlations coming back into play. We need to distinguish between moderate risk aversion and severe risk aversion. I think you go back to 2008, Bear Stearns blew up. There you see some moderate risk aversion. The dollar is not a safe haven in that type of scenario. It's not a safe haven in this type of scenario, and so it can weaken as commodities rally, as the stock market rallies. When you have the emerging market sell-off, when you see a sustained sell-off in the stock market, that's when international investors are bailing out of their high-risk positions, going into cash, and they prefer to hold their cash in U.S. dollars. So, yeah.
Well, I just wanted to ask because, clearly there's a significant risk premium built into oil, and understandably so. But when you look at all the precious metals, you look at even non-precious metals, you look at commodities generally, including agricultural commodities, you look at currencies, you look at oil. Is it possible that all of these things are moving up so much and it's not related to the Fed's monetary policy?
Well, it is certainly not just the Fed's monetary policy, and there is a lot of speculative money at play right here. There's no doubt, though, at zero interest rate does encourage risk-taking. Borrowing at near zero interest rates and investing in some of these rallying markets is quite an incentive.
All right, guys, appreciate that. We got to move along here. Good to see both of you. Stephen and Michael, we'll talk to you later.
All right, still to come on Squawk this morning.